Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, we're going to spend just a few minutes looking at the SPY and the Nasdaq today. We're going to keep this one short and sweet as there's nothing really to talk about in the meantime. We have our primary count, we have our alternate count. So let's start by looking at some basic technical analysis first. Just going to get rid of the count for a minute. And there's just a few things I want to point out on the day time frame. So let's bring up our moving averages here, let's bring up our volume, and let's bring up our momentum indicators here, RSI and the MACD. So we saw strong bullish divergence between these lows and these lows in the RSI and the MACD, and that has resulted in this springboard rally we've had since. Okay, nice clear divergence. We are back above the 250-day exponential moving average. We are back above the 10 and the 20 exponential moving averages. We've dragged them back through the 60, which we are now above as well, and all are now pointing back up. We are now back above all major moving averages, heading higher. It looks generally positive. If we look over the last 2 years, we can see how the last big sell-off we had was the COVID lows in March 2020. Everything since, every correction since, seems to be of a lesser weight degree than that thing. Okay, didn't come back to the 250, came back to the 60, came back to the 60, finally came back below the 250, not as violently as we did here. So my hunch, quite simply, is this was the completion of a larger cycle 4, and this was a 1 and a 2 in a primary degree of a cycle 5 going much higher. It's the most severe correction we've had since the March 2020 correction, but it's not as severe. Bottoming out and strong bullish divergence, and if we look at the momentum off of the lows here in the MACD, and we take a look at the histogram here, we can see that we've had nothing of the like since those lows back in March 2020. Every subsequent swing has been with less momentum, up or down. Right, we've got the most extreme reading in bearish momentum we've had since the March 20 lows, and we've already on our way back to higher highs. I think we're going to get that average pushing back up, maybe above what we even saw out of those lows. Signal and the average are back above the 20 and the back above the zero bound, I should say, and the histogram is looking stronger than it has in the last 2 years. So this is a larger weight degree, this was a larger weight degree, but this was smaller than that, and all of this in between was a lower weight degree. That's just how it feels from a pure momentum perspective. RSI tends to give us the same sensation. We have extremely oversold conditions on a daily. We don't reach anything of the sort again until the recent lows of the recent correction. We've had 2 conditions of oversold in between, but all of this was a lesser weight degree, and these are larger weight degrees. That's how it feels looking at it. Volume peaked on the initial low, fell off on the secondary low, giving us bullish divergence on our momentum indicators and bullish divergence between the volume and the price. A sign that we had the capitulation event followed by one more lower low on divergence before thrusting higher. Okay, and the trend has been the same. We peak the volume into the sell-offs, we flatten during the rallies. Peak during the sell-offs, flatten during the rallies, peak during the sell-offs, flatten during the rallies, peak during the sell-offs, and then flatten during the rallies. So all the rallies are made on declining volume, and have been throughout this whole move up. Right. Volume declines, price rallies. Volume declines, price rallies. Volume declines, price rallies. Volume declines, price rallies. Volume spikes into the sell-offs. Okay, so that's how we're looking at things from a basic technical analysis point of view here. Looking bullish, looking strong off of the lows, there's no doubt about it. Okay, we could still be in a larger part of the correction. We do have an alternate count to take us lower, but generally at the moment things are looking pretty bullish, as they often do when there are bad things happening in the world. Now let's bring up our primary count then. So I have this, we zoom in, as a double zigzag. A, B, C, W, X, A, B, C, Y. Let's come down to the 1 hour time frame here. Right, so now the low is different from what it is in the Nasdaq because we don't get a lower low here that we do in the Nasdaq. We get it here. So I've got this as a 1 into a 2, then a 1 into a 2, then a 1, 2, 3, 4, 5, 3, 4, 1, 2, 3, 4, 5, looking to go higher. Now we are going to get a pullback when we finish this fifth wave up into a larger 3, but it could be a 1, and this could be a instead of this being minor 1, minute 1, minute 2, we could have a truncation here for a lower low, or failure to make a lower low I should say. But since we're coming off of this low, I'm just going to call it 1 and 2. And you could put the 1 here and argue for 5 waves in here and a expanding flat 3, 3, 5, and then go 1, 2. It really doesn't matter. The 2 is going to be here either way, and this is now a subwave of a larger 3. That's what I think is going on. So yeah, expecting it to continue higher in the meantime, but with a significant pullback to come sooner or later. Maybe as we approach the previous highs, that would be a logical time for us to bump into some strong resistance. So primary 1 complete into primary 2. A very shallow primary 2, I know. Very shallow. Very quick. I'm not going to argue with that. It seems out of the ordinary until we observe the bull market for the last 13 years, and then almost at every wave degree we observe, we find shallow wave 2s. Markets just had a permanent underlying bid, you know. And if we look at how quickly we've come up in that time frame and how far we've come up in that time frame, I think you have to try and remind yourself that you would never have believed it if someone told you. Right, if you've been in the market as long as I have, you wouldn't have believed it. But it's happened. So now let's look at the alternate count. We don't need to change anything in the prior count. We're still topping in the same place, except here we get a single zigzag for an A expanding flat for a B, and then 5 waves down in a C, taking us lower than we already were back here. That's possible, and as we come up to this level here at 473.94, we're going to keep an eye on what happens with the price. Now, like I said, it's likely we'll get some kind of pullback near the highs. This would be the minimum requirement for a flat pattern because this represents 90%. Now, I say 90% because I expect it to just wick through it slightly. Yeah. This is actually an 89 fib that I run. I use the 89% purely because 89 is a Fibonacci number, and it often interacts with retracements as well. As in zigzags or you know, wave 2 retracements, as it operates also with the wave B expansion in a flat pattern, okay, coming up to at least 90% as we say by Elliott wave principle guidelines, but I just do 89%. Okay, it's just personal preference, as I see that it tends to kill 2 birds with 1 stone, so to speak. I can use it in multiple Fibonacci retracements and extensions. So that's the alternate. If we turn around somewhere around this price, we can become suspicious, and if we start to impulse down and see what happens to momentum, we can start to downgrade our bullish count in support of our bearish count. However, we have to be aware that if we do get 5 waves up here, okay, and we complete a third, and the fourth does not come back beyond the 1, then it's highly likely we've got an impulse here. So we're going to get a deep 2 anyway, right? It doesn't have to come back as deep as that. Like I said, it could be another shallow 2. 1, 2, 3, 4, 5. 2 to here, and off we go in that 3. So it'll all be about how the correction unfolds when it comes. And we're coming up to something. We're coming up to something where we're going to turn around sooner or later. And do we come down in 5 or do we come down in 3? Right, before we bounce. So that's the alternate. The primary is still, we've finished the double zigzag, and now we're zooming higher, and we will make new highs over the coming months and continue to press on from there. So that's how I see the SPY supporting the primary count for the meantime. Let's come over and have a look at the Nasdaq. This is the weekly time frame. Let's come down to the daily. Moving averages, we never got the 60 through the 250. We're back above the 60, 250, 10 and the 20. 10 and 20 now guiding up, crossing through the 250 with the 60 now curving up as well. All of it looking very bullish, a very positive shift to bullish momentum, very sudden, very quickly. Okay, same deal we saw here, except this time the correction back in the COVID lows really wasn't that big a deal for the Nasdaq. It really wasn't that big a deal. Right, we got a little bit below 250. We did the same here. This whole correction is actually bigger in absolute terms, not in percentage terms. Let me show you what I mean. Let's take the percentage of this sell-off, which was 30%. You know, a bit of a bone rattler. But let's take the absolute figure, the price terms, and let's compare what it would be today if we saw the same correction. Right. This would only represent 17.76% of today's Nasdaq, of the current off of the current highs. We've had a larger correction in those terms than we did back in COVID. Now I know that's not really fair because percentage terms accommodates for that. And fair enough, that was a scarier experience relative to where we were at the time. Relative to where we are now, this is spitwads. This is nothing because of how far we've come. I mean, it's ridiculous. From the March 20 lows, the Nasdaq has rallied 144%. More than doubled. 1.5 times what it was. Okay. Is that in line? Just look at the thing. With anything we've seen before. We've seen big increases, right? But nothing like this. This is all starting to feel to me like a blow-off move. That in itself, you could argue, is enough to be a blow-off move. But that could just be the start. That could just be the start. And that's how I've got it labelled at the moment. If inflation is what I fear it can be, then the only game in town is likely going to remain the only game in town. Protecting yourself from the devaluation of currency via the ownership of assets, and asset inflation has been the norm since the end of the GFC. Since the end of the global financial crisis, massive financial asset inflation is the norm, and there doesn't seem to be a cap on it. It just keeps pushing and pushing and pushing. And if we're just getting started with how bad things can really get, then I don't see any reason for it to turn around and stop. We have alternate counts here as well, but let's just have a look at our basic technical analysis before we look into this count. So, overbought to oversold, round trip on the daily time frame. If we look at our MACD, what I find interesting here is we've come out of this sell-off stronger than we even came out of the March 20 sell-off. Right, there's nothing in the history of the index which comes close to the readings of the histogram here currently. It's higher than anything else, and we've just mavericked our way out of here on our way up to help Iceman. You know, we've just whipped out of here lightning fast, super strong. Right, so that just feels like something big completed. Something big completed, and now we're just going to rock it. Right, sounds super bullish, I know, and I'll be the first to hold my hands up and say that was wrong, the alternate was right if we collapse, and say fair enough. But just going off of that, even if we come back and have a look at the weekly time frame, right? Let's have a look. This recent sell-off was greater in bearish momentum, right, than the March 2020 sell-off. It was more aggressive. Now you might say, yeah, but it only gave up 17% in price. Yeah, I know. It did a lot of technical damage, but it didn't do much damage in price. It's a bit of a stealth correction. Threatens to do a lot of damage, but actually doesn't. Does enough to reset all of the momentum indicators to kick us back into gear and send us higher. Does enough to call off all of these overbought conditions and all of this long-term bearish divergence. Does enough to cancel it all out, so we can you know, launch higher. It's one of those stealthy kind of corrections where we just had to shake off the excessiveness before we can become more excessive. Yeah, and that's just the way I see things at the moment. We have got a green bar now on the histogram. We've got a buy signal here in the weekly time frame. I'm not using that term to tell you to go and buy, right? So don't get triggered. It's a technical term. When the average crosses over the signal into positive momentum, and we've got bullish divergence, which we have, we can treat that as a buy signal, but it's not an order to buy. It can turn around quickly and the whole thing could implode. Ideally, what we want to see is a push above the zero bound, and for this momentum to increase beyond what we've seen before. Right. By that time, the so-called buy signal has translated into much higher pricing. So that's just an early indicator that we're now shifting into more positive momentum on the weekly time frame. On the day time frame, we're getting a little stretched. Right? As I pointed out, this rally out of here has been stronger than the V bottom back in April 2020. We've come out of here rip roaring. We're already in overbought conditions. Okay, so we'll have to see how things develop here. A turnaround lower at some point for a correction is going to come. We're going to get one into a two, but longer term we look like we're set to springboard out of here. So let's look at the alternate counts now, as we should always have an alternate. My alternate is that this was a diagonal. Right. We'll give the bears the benefit of the doubt in this one, that this was a major wave top. So we're right on the other side of the coin here. This was the blow off top. It's done. This is the top, and this is a diagonal into a 1. We'll get 3 waves back into 2, and then the entire market will just absolutely implode. Just collapse. It's possible we're going to keep it as an alternate because we're dealing with such an increase in volatility. And if you want to know when it really kicked off, it kicked off when the Fed backed out of their plan. Let me just show you what I mean. So let's come back to, we're going to need 2018. So here's 2018. Here's the bearish momentum in April 2018. And here's the lows around December 26th, Boxing Day. This was the Powell pivot, as it's known. This was when Jerome Powell shit his kegs, lost his nerve, and switched off all of the quarterly 25 basis point hikes and did a 180. Switched the free money cheat back on, turned the taps on, and since then, look at the volatility increase. Just look at it. The swings have become wild. Right? This is a market which back here essentially was given the green light to just go absolutely fucking nuts. And that's what it's done. It's just gone mental. So we could literally just be starting that process of a decade of extreme volatility to come. Declining volatility was the norm for the last decade. Rising volatility could be the norm for this decade. Okay, but as we can see, rising volatility doesn't mean market crashes. It means some pretty sharp, scary ones, but it doesn't mean the market crashes. The market's pushed higher as things have gotten more wild. So, and as the underlying trend of volatility has picked up the whole time. I mean, let's go and have a look at the VIX for a minute, and I pointed this out time and time again. There is the previous decade, right, from 2008 to 2018, right, of declining volatility. Get to 2018, December 17, 18, we have rising volatility. Low, high, low, high, low, high, low, high, low. Now that seems to be the trend. So the trend for this decade might be the opposite of the last decade, which is declining volatility. This could be increasing volatility, as the underlying volatility of the market increases over time. However, big events like March 20, the March 2020 incident, and back in the GFC, these are rare. Volatility events on this scale are rare. As we can see, we have some big ones. Right, we just had a relatively sized one now, not quite as big as some of these, but really big events are quite rare. So waiting for the market to melt down and do that again, you could be waiting a long time if history repeats itself. There's no way of knowing that that's going to be the case. It's just hypothetical. Overall, volatility is increasing over the long term. That seems to be the trend now for several years. and I think it's reflected in the wild behaviour of the markets. So, but there's our alternate. We've topped. So if we were looking for something now to trip us up, what would we want to? Let's take a. We've got a regression trend here. Push this forward in time. Right, so maybe we could be coming back to test trend in a very deep 2. 3 wave move, and then we come down to collapse. Right. That's the idea that the market topped here. Right, so that's going to be our alternate. We'll see what happens. In the meantime, I think it was 1 into 2. And now we're going to rip roar out of here over the coming years in a 3. And we're just going to go higher. We're going to have some big pullbacks along the way, but we're going to continue to march higher. Right, I know that's a very bullish take on things, guys, but I have alternate counts, so bearish counts. So I don't want people yelling at me telling me I'm a stupid bull or something, because I will flip like that if I have to. Okay, as you should too. So I'm just going to ride this. I'm going to continue to remain bullish on the US markets until I'm told otherwise. And I treated this low as a buying opportunity. You know, I was sharing just the other day with Discord members, PayPal trade, Facebook trade, some of the obvious opportunities which arose during the sell-off. You know, there's lots of them. And things seem to be bouncing back. So it could all be a head fake, it could all implode tomorrow, right? Or maybe we're just going to continue to rocket higher. So that's the way I see things at the moment. Going to remain bullish on the SPY until proven otherwise. And we'll see where we are in another week's time, although I will say whether or not I'll be able to find the time for an update in a week's time is very much in question. My second child is due on Monday. You know, my partner's going in to be induced, and you know, so we should be coming out of the hospital probably within the next 24 hours after that with a, hopefully, fingers crossed, a lovely healthy boy or girl. Don't know which, want to be surprised. So I'm taking 2 weeks off, essentially, where if I find time to do something, I will, but I'm not going to obligate myself to do anything. I'm going to stay at home, look after my newborn baby, and look after my wife. And that's my plan. And I will see you when I see you again. So, there you go. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. Huge thank you, as always, to all my Patreon subscribers for your support. We're going to have one more live stream this week. Can't promise you one next week, but it will probably be Thursday. If you are interested in joining the Patreon, there's a link in the description box below. Head over, have a read of the tiers, see if there's anything you're interested in, such as the Elliott Way course and things like that. But if you do want to sign up, leave it till the start of next month now, right? Because it's the 30th today. So don't sign up today, because you'll be paying the day you sign up for the first time you sign up, and then the first of each month thereafter. So you'll be paying for a day with a month's fee. So just leave it till April 1st, you know, or April 2nd if you don't want to feel like a fool, since it's April Fool's Day. But the first should be fine, depending on time frame. There is an issue sometimes where Patreon will charge you if it's still March here, but April where you're signing up. But don't worry, if that were to happen, I go through all of the payments on the Patreon, and I refund anybody who suffers from that mistake. If you've signed up honestly thinking it was the first, but you get double charged, I will refund you. Anyway, guys, thank you very much for joining me, and hopefully room for one more video this week on gold or silver likely, and then I'm going to be checking out for a while. So take care of yourselves, and I'll see you when I see you next. All the best. Bye bye.